Income tax gets even trickier when you add in capital gains. Capital gains tax is tax on the profits of investments including stocks, businesses, and real estate. Capital gains have two types: short-term held for less than a year and long-term held for a year or longer. Capital gains counts as income for purposes of how much a person earned in a year, but only short-term capital gains is taxed at ordinary income brackets. Long-term is at 15 to 23.8%, which is far lower than 37% when we consider it's the truly wealthy that benefit. Let's say two people report $1 million a year, one with only ordinary income and one with only long-term capital gains. After tax, their difference is $678,000 versus $762,000, about an $84,000 a year difference, which is more than the median household income of $75,000. Even at 50-50, the person would have $56,000 more than the person making only ordinary income. So why do capital gains tax exist? It's supposed to help reduce risk in losing money in investing, but the S&P over 30 years has a rolling 10-year average of 8% gains. If $1 million were invested in an S&P index fund, after 10 years the investments would be worth more than $2.1 million without adding any more money. Most of the truly wealthy get more than 8% and or have more than $1 million to begin with. And capital gains is only on the profit, so our example of 1 million capital gains is 1 million after subtracting what was originally put in. If they put in 1 million originally and it became 2 million, they'd have to sell the whole 2 million. 401ks are not capital gains and count as ordinary income when you take distributions. The 0.1% pay about 26% in taxes instead of closer to 37%. With an average reported income of 6.4 million, about 5.5 million are from capital gains and 900,000 are from ordinary income. Who knows what the original cost basis is, but if they feel comfortable to report 5.5 million in capital gains, just imagine how much more they have. And they saved about 750,000 in taxes. Capital gains may save some Americans a little money when they sell their homes, but it saves 0.3 million to 3.3 million Americans a lot more money that then turns into more money. We'll talk about other tactics that impact income tax, but for now, these are my 2 minutes.